Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Soo-young, professor of business at Chung-Ang University. Professor Song, good afternoon. Thanks for coming on today.
Yeah, thank you for inviting me, Mark.
Well, Professor, let's start with some growing concerns about the ability of big Korean companies to borrow. As rates rise, there's reluctance among some institutional investors concerned about falling bond prices. For companies with weaker credit, this is a problem, and we could see liquidity drying up for them. Could you talk a bit about what's going on in terms of the ability of companies to access capital?
Yeah, access to the capital market, particularly the corporate bonds, 3-year AA minus, so whose credit rating is relatively good. The surge of the yield for the corporate bonds, the 3-year AA minus, has reached on the day of April 20th is 3.662 percentage points, which is slightly lower than the April 11th, which is the highest for the past several decades, not decades, I mean just a decade. So we have seen that as the supply bottleneck and the inflation has turned out to be a really a threat against the world economy, and the same is true to Korea. Also, I have seen that since until March, actually the corporate yield has slightly increased. The trend is clearly upward, but however, recently for the past month, I have seen there's some surge. So, which means that the volatility of the yield change has been greatly increased. But overall, considering the treasury bonds of U.S. and in Korea, 5-year treasury bond yield, then the relatively it's a little bit stable, even though it is affected by the recent increase of the prime rate in the Bank of Korea. So this might reflect the market's expectation of the inflation and the interest rate remains relatively stable over the longer and the medium period, but at least in the short period, clearly, in the short term, it's very volatile and very high.
Right, and you mentioned the supply chain crunch and inflation, and we've seen car prices soaring for one thing. Car makers haven't been able to make them fast enough because of shortages of parts and computer chips. Some orders for chips are going to take around a year to fill. Used cars, as an alternative, have also soared in price. So how severe is the situation, and how long is it going to take for this to unwind?
Yeah, the current surge of the used car price may reflect the spillover effect of the bottleneck of the supply to the parts of the new cars. Because of new cars are not readily available in the market, then the consumers who needs the car, then they turn their attention to the used car market. That might press the price of the used car market in the recently very high. According to the data in the U.S., almost the used car price has been increased by 29%. In Europe, 28.3%. In Japan, they have shown that against the previous year, there is an 11% surge of the used car price. But recently in Korea, actually, the new car market has not reflected yet the price currently, but recently we have seen the reversion of the used car price, which is 1 year old, and that reflects the raw materials price of for example, hot rolled steel sheet. It has been increased 149%. So I think this is taking advantage of the situation, bottleneck situation, and along with some, in addition to the frost and the snow, then because Ukraine and Russian war, and then that has reflected surging price of the car market. So, which is dubbed as carflation, but it will be resolved at least in the medium term, not in the short term.
Carflation, that's right. Well, now to the equity markets, Professor. Stocks on Wall Street overnight were a mix. Tech shares were hit by a decline in the price of Netflix stock of more than 30% as it reported a decline in subscribers. Smaller but significant declines for other streaming services as well, and that led the more traditional companies on the Dow actually with a decent gain. The S&P about flat. What's the story in the global equity markets?
Yeah, particularly of interest and of concern is that Netflix and some kind of streaming service giant has shown the very dramatic drop of the stock price. That may reflect the current situation. According to the report, that I can see that the net loss of the subscribers by 200,000 by Netflix actually. There is a net gain in the streaming service of 500,000 users, but the Netflix lost the customers from Russia. That amounts to 700,000 subscribers. But that is the immediate fact. But overall, in the long run, I think as the economy is free from some pandemic jolt, that means people begin to look for some other substitution of leisure. During the period of the pandemic era, people have no choice but to see in the room and in the couch and stay at the room and watch the movies and enjoy the streaming service. But as long as the pandemic becomes endemic, and then people look for some other leisures and outdoor activities, that could have hampered the increase or growth of the Netflix, such as streaming service. That is reflected in the recent downturn of some kind of Rock and the Disney and Amazon. Those kinds of streaming services has been reflected. But on the other hand, then on the other side, the market has been there is a turmoil, but overall the economy may reflect that the stock market and the capital market reflect the current situation is overall negative and pessimistic, but optimistic in the medium term and in the long term. Anyway, the Ukraine and the Russian war should be resolved. Otherwise, it will be a really serious drag against economic recovery.
Absolutely. And finally, Professor, Korean stocks closed higher today. Institutions were the net buyers. Korean streaming services were also seem to be affected by the news about Netflix. Tell us about the domestic market, Professor.
In the domestic capital market, I see actually the foreign investors' comeback is not as impressive as the institutional investors was. So institutional investors played a really serious, significant role to pull out the increase of the Kospi and Costa, and in the overall, still there are people suffer from the losing, and the individual investors they start selling, that they are engaged in net sales. So according to the data, the institutional investors, they look forward to positively in the capital market. So that's why they begin to purchase the stocks, which has been discounted quite a while. So anyway, it is. I wonder whether that reflects the positive aspect from the institutional investors' perspective, but still there is a very opaque future uncertainty in the Korea market because of the new government and the geopolitical problems surrounding East Asia, particularly between the U.S. and China, and Japan and China, and then what is the position, what should be the optimal position for the Korean economy. That is quite a daunting job for the new government to take care of.
It is indeed. Well, Professor, we'll have to leave it there for today. Thank you, as always, for coming on. We appreciate getting to hear your insights. Thank you.
Okay. Thank you.